This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Europe vowed to stay united against Russia's demand that they pay for its gas in rubles, as the threat of an imminent supply halt eased on Friday. European capitals have been bracing for a disruption to gas imports as Russian President Vladimir Putin seeks retaliation over Western sanctions for the February 24 invasion of Ukraine. Some buyers and governments were working on ways to potentially pay for gas in rubles as Moscow in recent days has raised the specter of cutting gas supply if its payment terms are not met. With weeks left before bills are due, governments in Europe, which relies on Russia for more than a third of its gas, are talking to energy companies about Russia's demand.
US allied countries on Friday agreed to their second coordinated oil release in a month to calm markets roiled by Russia's invasion of Ukraine, the International Energy Agency said on Friday, without specifying volumes. The silence on the size of the agreed release left crude prices largely unmoved, with benchmark Brent trading near $104 a barrel, underscoring supply concerns as releases from finite supplies struggle to make up for a loss of 3 million barrels per day, BPD, of Russian oil estimated by the IEA. The announcement showed IEA member states' strong and unified commitment to stabilizing global energy markets, the Paris-based group of 31 industrialized nations, but not Russia, said in a statement following an emergency meeting.
Moving on to the top news in the energy sector.
Russia's oil and gas condensate production fell to 11.01 million barrels per day, BPD, in March, from an average output of 11.08 barrels of oil per day in February, two industry sources familiar with the data told Reuters on Friday. On March 31 the output was down to 10.6 million barrels of oil per day, the lowest daily level since September 2021, the sources said, and Refinitiv Econ data showed. Fall in Russia's oil output happens along with disruptions with the state's oil and product exports as European consumers turned cautious of trading with the state due to Western sanctions. Russian oil output is falling in time when OPEC Plus deal offers the state to rise its output monthly.
Marine fuel sellers have stopped serving vessels flying the Russian flag at major European hubs including Spain and Malta in another blow to Moscow's exports, 5 industry sources with knowledge of the matter told Reuters. Losing access to refueling points in the Mediterranean Sea poses major logistical problems for Russian oil tankers going from Baltic ports to Asia and also creates safety concerns over potentially being stuck at sea with flammable cargoes, shipping sources say. Russia is reeling from a wave of severe economic sanctions on its banks, and oligarchs and foreign companies are cutting ties after Moscow's invasion of Ukraine, which Russian President Vladimir Putin calls a special military operation. Next, we have the top news in metal markets. The London Metal Exchange suspended deliveries of some Russian-produced metals into its approved warehouses in Britain on Friday, although there is none stored in them at present. The exchange, which is owned by Hong Kong Exchanges and Clearing Limited, said in a statement that there was significant risk that someone receiving such metal from British warehouses would be hit with very high additional costs. The British government placed 35% additional duties on imports of Russian copper, lead, primary aluminium and aluminium alloy on March 15.
Copper prices retreated on Friday on concern that weak factory activity and COVID-19 lockdowns in top metals market China will dampen demand. 3-month copper on the London Metal Exchange (LME) shed 1.1% to $10,264.50 a ton by 1600 GMT after 2 days of gains. Economic data in China slowed in March and people may worry that the current lockdowns in Shanghai could happen in other places, said Xiao Fu, head of commodity market strategy at Bank of China International, BCI.
We will now look at the top news in the agricultural sector.
China's COVID-19 curbs are disrupting the supply of fertiliser to the country's northeastern breadbasket just a month away from spring planting, threatening this year's corn and soybean crops if not resolved soon. Farmers typically have fertiliser prepared in early April before applying to fields later in the month during planting. But China's worst outbreak of COVID since the pandemic began 2 years ago have triggered strict controls on movement of people and goods, sharply slowing deliveries. Fertiliser producers, dealers, analysts and associations said rules requiring truck drivers to take COVID tests every 24 hours, a need to obtain special passes to deliver goods and factory suspensions due to local COVID cases are all contributing to tight supplies.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.